Okay, welcome back. We're 20 odd points lower at 17,643 or so. Markets staging a stunning comeback, and if you've been following the markets from before the budget to where we are now, we've had a dramatic round trip already. We have Dharmesh Mehta, who's now joining in as well. Needs no introduction, veteran the market, investment banking, deals, M&A. Dharmesh, great to have you with us here on this important day. Thank you very much. Before I ask you to characterize the budget for us and what you made of it, the market action has been just astounding, right? The last 1 hour or so. What is going on? And the crux is, of course, emanating from the worry or the fear is emanating from what's happening with the Adani Group stocks. So I want you to start with that. A quick comment.
I think so. See, if you look at fundamentals, a lot of the stock price of Adani Group stocks have actually come to a very interesting level to buy. So I would just remove the noise, just focus on which are the companies I would like to buy on based on their cash flow, the valuation. You're getting a lot of them now today. Adani Ports was a darling of the market. Ambuja Cement, we had people dying to acquire that asset. And Mr. Gautam Adani, I would go by pure fundamentals and start investing in those names. And you're getting one of the best days in your life to actually go and buy those stocks.
In terms of, because it's, I completely agree, right? I mean, hundreds of, maybe if not thousands of investors, people who visited the port, great world-class assets. That is not the issue. I mean, especially Adani Ports. But for the stock a stock like that to sell off 25, lose 0.25% of its value. I mean, as they say, market is collective wisdom, right, Dharmesh? But it is not always right. But go on.
I would say, in fact, it's giving you a great opportunity. So somewhere or the market is also wrong. When all the stocks moved up, let's say almost 100%, market was wrong when you bought them below 100%. So how do we say the market is right at a certain price? Nobody knows market is right or wrong. But I would go by pure fundamental reasons. Go and look at the cash flows, the kind of business model, and the kind of capex announced in this budget. I would definitely be loading up on those stocks.
Dharmesh, clearly you've pointed out those three big stocks that have fundamental value, and valuation-wise as well, they've come to a decent level. That's Adani Ports, Ambuja, as well as ACC. What about the other way of playing it? From the time this entire issue blew up, some of those banking names have got hit hard. And various bankers, they have come in there and they are saying that there's no real worry out there. If that's the case, then is that providing a better entry opportunity, an indirect way of playing this entire thing?
In fact, it's a joke what has been happening on the banking stocks, or people thinking that something will happen to their debt, what they have. It's not a company with no cash flow or no profits. All these companies have strong profits, which they can easily service their debt. So I don't understand why would anybody be worried. If you personally ask me, it's the media which is hyped it too much. We should not focus. All of this will calm down in next week or two. End of the day, people will see whether they can service their debt on the earnings which they have. This budget is actually given one of the best budgets for that group. If you look at it, 3 C's which I call this budget: capex, consumption, and credit. These are the 3 C's of this budget of Mrs. Sitharaman. Maybe one of the best budgets that we have seen. So the capex cycle is coming back. There is going to be consumption thanks to the tax rebates which people have got, and credit cycle will move up. I would looking at that and just focus on that and buy the stock. Not market does because of global flows, MSCI selling coming in, some ETF fund is selling India or other markets. These are all temporary blips.
Dharmesh, the other pocket which is common for intense selling pressure are the life insurance names. So HDFC Life, SBI Life are down 10% as the budget is proposed to remove the tax-free status on certain life insurance policies. Are these stocks looking attractive, or do you think there's going to be some more pain?
I need to understand the impact. These stocks were not cheap. So I need to first understand what the valuation is looking at and what kind of impact happens. You don't need to buy stocks on day one. There's enough time to buy stocks after you've done your research, understand the impact, and then go and load it up. These are all good, high-quality stocks. 7-8% coming down, going up is not going to change much. You will get opportunities to buy them again. But you need to be sure. So I will not be jumping because there is a change which has happened and we need to understand that change. Maybe it's not that bad. So actually they may look attractive. But here the valuations were not cheap. That was the only thing.
Got it. Dharmesh, hi, good afternoon. We're almost back in positive territory. Sensex is already in the green, 400 points up. Nifty's almost there. Very interesting. So, Dharmesh, I just want to take a step back and get your perspective on everything that's happened in the last, 6-7 odd days. Yes, fully take your point. I mean, that's a separate debate and argument on the valuations and the quality of assets and whether one should be a buyer right now or not. But I want your assessment on what this has done to the market and the way the episode played out. You know, the short sellers in some overseas instruments, the way everything kind of exacerbated here in the market, the pressure that continues to exist today, and, related collateral damage that we saw. Just your thoughts on what we've seen, whether the worst of it is over, or whether just at a technical level, at a trading level, there still could be some more pain.
I think that there are good price points to buy those stocks. As I said, I will be selective in all the 5 names. Doesn't mean I have to buy all 5. If there's great value in a port and, in a cement, I'd rather look at those names rather than buying holding company, which actually you buy when the markets are very bullish. So I would rather go in those names and buy through them.
No, Dharmesh, I meant more from a wider market. I mean, the question was more for the wider market. You know, the damage was spilling over in terms of sentiment, in terms of, I'm not too sure if there were margin issues that were impacting the rest of the space. Banking we've discussed. But the damage to the wider market, do you think at least that ends maybe today or tomorrow? I don't know. I mean, have we ring-fenced that?
Well, if you look at the broader market, what has fallen? You look at ICICI, HDFC Bank, Axis Bank, they are actually still in those range where they were before 10-20 days. So the HDFC Bank went down as low as 1600, it's back to 1650 or wherever it is. So it's not the collapse of 1300 where it went in the low when the whole fear was. So the large stocks like Reliance and HDFC, ICICI, they actually haven't collapsed at all. So broader market actually is done well. It is just these 4 or 5 stocks which is taking all the attention. If you remove that today if I want to buy HDFC Bank, it's not available at the price it was available for 2 months. It is still at a higher price.
Yeah.
So I would say markets haven't collapsed. Market is not in a panic mode. It is more the hype and the kind of fear being caused. All these things die down. We had similar reports in larger groups earlier, and all those stocks have been 3-baggers and 4-baggers post that.
Yeah.
So
Although
I'm not commenting they're right or wrong. That's not my business. That's the regulator's business. But I'm not going to comment on that. But I only go by fundamentals of the company. And all these companies have very strong fundamentals. They had run up a lot in last 1 year. So you're actually coming back to 1 year back price. Ambuja Cement, the pricing was 350 rupees or plus, somewhere around that. Mr. Adani has put 20,000 crores at 420 rupees. So basically 350 rupees. What more do you want as an investor?
Open offer was at 385 rupees.
Yeah, no, absolutely.
I think open. If you look at Mr. Adani's put at 420 rupees, 20,000 crores.
Yeah.
Dharmesh, you mentioned panic caused by, you threw in the word media also there. I mean, we were nicely, we
just had to report it to a job.
I'm just joking, but we were nicely reporting on the budget and capex growth and
Putting our
capital
numbers
outlay and
together.
railways and insurance taxation.
Then the Adani train
And
came and kind of
suddenly
hit us as well.
You had a bit of a train wreck with stocks selling off. By the way, the first.
I didn't mean that media is causing the panic.
Of course.
It has been discussed too much. It doesn't need that much.
I'm just pulling your leg. By the way, Adani Transmission is the first stock to come back into the green. It's from the group, that is. It's up 1%. And the low on Adani Transmission was 1596. It's come back to almost 1800. So it's made a full recovery. The others are still under pressure, although they've also, ports, for example, has recovered a full, I think, 12-13% from the lows. It's not.
There is no discussion.
Yeah.
All this will stabilize in a week's time.
Yeah.
And then you'll see normal thing. You look at all their acquisitions, they're all happened at a very good price. If you look at Adani Airport, you look at Ambuja Cement. So it's not that you acquired something very expensive when you've done that in the last 3-4 years. They've been very well. They're one of the best execution groups in this country. You just can't write them off in 1 week.
Oh, yeah. No, absolutely. And I think you've given very pointed kind of ideas. 2 names from that group, Ambuja Cements and Adani Ports. You call it the opportunity of a lifetime with what the market is throwing at you. Let's just go back to the budget. Do you think there is enough, once all of this kind of settles down, and hopefully it will, there is enough in the budget for the market to cheer? I mean, especially on the infrastructure side, Dharmesh?
That's why I said it's a CCC budget, capex, consumption, and credit. So you're going to see capex coming in big time, which will result in credit offtake will happen, because you require capex to happen for the credit to pick up, which looks like happening. And with the kind of tax saving of almost 38,000 crores, that comes back to the consumption story. Yeah, it's not a very large number, but it still helps the entire cause. I would say the only worry to me there is that inflation may come back if the global commodity prices go up and the demand starts coming in. And secondly, equity markets will have competition with bonds and FDs. So that will move up. So we just need to be careful whether, suppose tomorrow a bank offers you 8.5%, I may not be investing in equities at that given time. So there's competition coming to equity, which was not there before 2 years or last 2 years. Now there is serious competition.
Dharmesh, do stay on. We've got a few minutes to go before markets close on D-Day. So let's get in a few trading ideas. Mitesh Thakkar is back with us. Mitesh, 650 points. That's the trading range on the Nifty. On the Nifty Bank, the trading range is 2,500 points. This has been a very tough day for a trader. What would be your last hour trades?
It's been very difficult to figure out, where the index is going. We had a break above 17,800 and then immediately sold out below that. So quite difficult to take an index call. So we've been avoiding that, and I think that's been a good strategy for us. It's worked for us, I think, not being in the markets or not trading the index. But on stock side, I think two stocks which I like a lot. One of them is Tata Motors. I think it's back to the area where I would want to buy it, around that 440, 445 zone. It's slightly higher than that, but let's around 440, 445, buy with a stop below 435 and a target of 465 can be looked at. And the other one is Chola Finance. That's still holding out well, though it's come off the highs, but the overall setup is positive. So this is a buy with a stop below 730 for targets of 790.
Got that. Lady and gentlemen, for me, I think the stock of the budget day really has been ITC. What style? What style? What a mover. 2022 and today. 3 years there was no tax change. Today there was some tinkering. But obviously the verdict is out that it's nothing much, a couple of paise here and there, depending on the cigarette that you're picking up. And really, what style and what class? Dilesh, I want to get your thoughts on, I don't know if you can talk about ITC just because it's been such a story. But overall consumption, I don't know how much additional money is going into the hands of the Aam Aadmi because of this tax change. Everybody will do their math and figure out if they're indeed saving more. But thoughts on consumption and specifically the ITC story?
Well, on consumption, I think this budget has only been positive because there is some amount which will still be left in the hands of the taxpayers to go out there and spend. Now, the question is whether they spend more on soaps and shampoos or on traveling or on hotels or holidaying, all of that. So I think it's really positive.
I'm not sure the last word on that still needs to be calculated, I think, because once you move to the new regime, you don't have ATC, you don't have ATD, and a couple of other things sort of get knocked off as well, housing and things like that. So I think we need to do the calculations to see how much of the switch will happen, because we still have the option of staying with the old regime.
Yeah, but I think you will see more and more people switch to the new tax regime, and I think it's not over as yet. Maybe next year, if the government believes that enough have not yet shifted, who knows? There's more in store in terms of incentive for you to basically switch to the new tax regime. But net, I think you're going to be left with more money in your hands to be able to kind of spend. So that bodes well in terms of demand. It augurs well. Just that purely as investors, we have been talking about the 3 Cs, and right now I think the capex and the credit side is demonstrating higher earnings growth. The consumer side is probably still kind of reporting single-digit growth, maybe at best 10-15% growth. But on the other hand, the capex-oriented sectors or companies, the credit companies, which is the banks, specialized lenders, they're all growing at 20-25% in terms of earnings growth. So in terms of relative, I think still the capex and the credit side will continue to outperform the consumer names over the short to medium term. Over the long term, the structural opportunity remains and the consumption patterns will change. So you got to decide if 10 years back the trade was consumer staples, maybe the trade for the next 10 years is going to be more about discretionary spending and aspirational spending and all of that. So I still believe the long-term consumption story is intact, but I think for the short to medium term, they'll be relatively underperformers. So,
did you buy ITC at the lows?
No, never bought ITC. Never bought it, and I don't intend to buy it as well.
Okay. Dharmesh, life insurance stocks are down sharply, 11-12%. You like anything in that space, or you like the space itself?
Need to study what's happened on the stocks and what is the impact of the new regime. So I would still wait to understand the real impact and decide. I'm sure real impact.
All right, Dharmesh, the entire China theme has been playing out quite well. But if China is going to do well and their unlock is going to play out, and if the India budget is going to support this entire infra space, etc., then metals could do well. And that's why we have some of those steel stocks that have held quite strong. Your view on the metals pack? Is it providing an opportunity, or the ship has already sailed?
if you look at it, the steel prices are up. I was just talking to a real estate builder, and he was talking, the 40,000 rupee per square feet is now moved to almost 60,000 rupees per square feet. That's the kind of impact they're getting on steel. So some of them already there happened. So clearly for that reason, metal stocks may do well, because this quarter onwards, you may see a good amount of profit coming back, which were actually not. As I said, this budget is all about consumption and capex. So whichever stocks and sectors and credit, those companies would benefit. India is going to be the manufacturing hub in the next 10 years for the world. You're going to have serious competition from Vietnam. I was just in Vietnam, and the kind of infrastructure they have built to compete with India is something one must see. But even then, there's enough opportunity coming. All the EMS companies which we have been talking to, and they've taken them public, they're having strong, order book. So I believe that manufacturing for next 10 years, India has a huge opportunity in the manufacturing sector, and you're going to see larger investments coming there from the larger groups rather than only the smaller companies today.